Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of July 10th, 2016. Well, the big news last week, of course, was the employment situation report that came out on Friday, and it was pretty stunning. The consensus for non-farm payrolls was that it'd be 180,000 jobs added. It was 287, so just a huge jump. Private payrolls consensus was 170, and the actual came in at 265. And the market rallied. It was really an impressive rally on Friday. But we have to ask ourselves, what's this based on? Is it based on solid fundamentals and strong economic growth? Or is it based on, kind of some artificial propping up by the Fed and some other factors? And I think many people are kind of worried that the latter is true and that we may be heading for a Wiley E. Coyote moment where we're running along and suddenly realize there's no ground underneath us, and that happens there. So I don't know if it's going to be quite as dramatic as poor Wiley there, but at some point, if you've been following me, I do believe we will be getting a correction on the market. And when's that going to come? Not sure. Based on Friday's rally, we took out some previous highs. We broke out of this channel that I had defined here. We broke down and now we broke up. This dashed green line represents the all-time high for the S&P 500. It's at 2135.46. That was an intraday high. We are at within 1 point of the all-time closing high of the S&P 500. And as we break up here, there's a really high probability we're going to go in and probably put in some more highs. We may pull back first, but it's really probable we're going to take out this all-time high and put in some new ones on the S&P 500. Now, my prediction is still that even though we put in highs, they're not going to be substantial. They're not going to be super impressive. Let's take a look real quick at the weekly chart. So here's a view of the weekly chart of the S&P 500. And again, we have this amazing bull run from back in '09 as the recovery started, and we're up here at the top and really consolidating. So again, I think the probability now is that we will push on to a new high, but it's not going to be anything material, anything super exciting, and that at some point then a correction will begin, and the likely correction zone is Fibonacci retracement 38.2 to 61.8%, which takes the S&P down to 1644 to 1343 from current levels. And we'll update this if we do put in some new highs. Meanwhile, we have to trade the realities of the market, and the market's heading up just a little bit. It's a tough market to trade in. We've been able to squeak out some decent winners out of this and maintain profitability. And we'll continue trading the realities of what the market really is doing. And if it continues up, we'll be taking some longs. And if it finally shows signs of heading down, then there's going to be some real exciting trading ahead. But for right now, it's heading up to some new highs. I'll bet not too high. Let's take a look at gold and then oil again, as always. So here's the gold futures on a daily chart, and we've been watching this really close. We talked about the correction several months ago that was beginning, and that played out really nicely, and then we got a pretty nice correction down into a Fibonacci retracement zone, kind of as expected. And now we've got this next leg up, and we've got a target zone established up here into a Fibonacci extension of 61.8 to 100%. The bottom of that is 1359 per ounce for gold on the futures contract, and we are just in that zone, and we're really showing signs. All the signs are for that momentum to continue and to get deeper up into this target zone here. We've got the oscillator is bullish, it's positive and continuing up, and we're above the Ichimoku cloud here. We've got a crossover, fast over slow. So all signs are that this trend on gold is going to continue for a while up into this target zone. So I'll be a little late to be getting new positions into gold unless the specific charts lag this a little bit and look like they're going to catch up. But on gold itself, a little late to be getting in. If I'm in, which I am, just stay with it and trail stops up and wait for signs that that's going to turn. But looking pretty good still for gold. So oil, we've been talking about this quite a bit too. We saw this move up in oil beginning back at 37.09. It had a really nice run up, and now it's correcting just a little bit like gold did before. And the expected correction zone on oil is right now 45, 41 down to the low 40s, about 41.25, and it's just in that zone right now. And you can see with the Ichimoku cloud, the cloud provides some support, and it's just hitting the bottom of that support. So expect pretty soon oil is going to turn around and take the next leg up to the ultimate recovery targets, which are low 60s to low 80s. This may take a week or two or longer. Oil is pretty volatile to play out, but right now it's pulling back, and then we expect at some point to turn around again and go on, head on up. Well, that's the update for this week. Be really, really careful as the market, is at the top and may put in a few new highs here, but again, nothing too exciting. Trade the realities, use risk control, be really, really careful, and I look forward to giving the updates in the upcoming weeks as this plays out. Take care. We'll catch you next time. Thanks.